My name's Mark Beresford. I'd like to just ask for the next slide to be shown, where we're talking about ourselves. I'll just introduce ourselves. The webinar focusing on Western Europe and successful payments and e-commerce strategies for Western Europe. As I said, my name is Mark Beresford. I'm a director at Emecz Company. I'm responsible for the retail payments practice at Emecz. I've got a considerable amount of experience of working with omni-channel retailers and dealing with the challenges of payment acceptance over the last 20-odd years and how it's changed. And I'd like to introduce my fellow panelists. So just next slide. So Richard, do you want to kick off and introduce yourself?
Yeah, brilliant. Thanks, Mark. Hello, everybody. My name is Richard Harrison. I'm with PPRO. I've been here for coming up for a year now. I've been in payments for several years. Worked at the likes of PayPal, PaySafe, and Skrill. In the past, I'm a partner development manager here. So what I do is partner with new PSP payment service providers to obviously push the PPRO proposition to the rest of the world.
And Steve, next slide.
Hi, I'm Steve Emecz. I'm the Chief Commercial Officer for collectAI, based out of Hamburg. I've been in e-commerce and payments for about 20 years, initially as a head of e-commerce at Xerox with revenues of a couple of $100 million there. So I've been on the client side, and in the last sort of 10 years been on the supply side with payments. And at collectAI we provide a service to clients, but also through a lot of payment companies as well. So I'll be talking a little bit about PSD2 and the receivables market as well today.
And last but not least, the next panelist, Ralph.
Hello, my name is Ralph Olhausen. I'm also with PPRO. I'm in charge of business development here. So I'm looking after our company expansion, for example, in terms of geography or business scope. And so one of the opportunities looming at the moment is around PSD2. So those are the things that I'm looking after at PPRO.
Excellent, thanks, Ralph. So I'm going to ask Richard to take the next slide and next few slides and sort of talk through the festival online payments. I just want to also remind the audience that PPRO have got the latest set of e-commerce and payment reports on the website. So if they are interested in knowing more detail or downloading the latest reports, please help yourself to ppro.com and find more information there. So Richard, without further ado, I'll hand it over to you. Oh, just also Richard, sorry, yeah. Richard, just to let the audience know, I will be sort of facilitating questions as we go through around the slides that you're going to present along with Steve. Audience questions from the participants on the webinar today. I'm going to collect those questions and try and deal with them appropriately at the end. Is that okay, Richard? So I'll let you proceed. Perfect.
Thank you. So if we go to the next slide, please. So as Mark said, so in this webinar today, we're looking at Western Europe as a region. Western Europe is certainly one of the most richest regions in the world. I won't list off all of the countries within Western Europe, but depending on who you speak to, the number varies. However, we have a recorded 28 different member states within Western Europe. However, over the years, things like religion, Cold War, the Eurozone, different political interventions have chopped and changed the layout of Western Europe. But still today, Germany, which is one of the countries we're going to look at later, is one of the largest economies. Actually, at the moment, Germany ranks 4th in the world. And as a region, Western Europe, we must be doing something right, because countries like London, Paris, Frankfurt, and Munich are all in the top 10 as having the most number of millionaires and multi-millionaires in residents. So there's certainly a lot of money floating around out there. But as you can see from the slide, Western Europe as a region, we transact 52.8 billion in annual e-commerce transactions. And as a region, banked account penetration is at 96%. So if you look at that and compared to the rest of the world at 62%, we have a lot of people who are banked. Credit card penetration is pretty high as well at 48%, compared to the rest of the world at 18%. So as you can see on the pie chart there, you've got several different methods in use throughout Western Europe, which we're going to discuss later. But as I said, the card-based penetration is certainly at the highest there, next to bank transfers. And I think that is primarily down to the fact that, as I said, 96% of the population is banked. Within Western Europe, we've got, out of the 348 million people that live in Western Europe, 342 million of those are online. So it's almost 100% of the people who live in Western Europe have access to a computer or a laptop or a smartphone or something like that. 14% of the population purchase things online, and the actual GDP per capita within Western Europe is just a little over $38,000. So it's pretty high. So we can jump to the next slide, please. So as I mentioned, we're going to look at certain countries within Western Europe. Germany certainly going to be one of them, but we're going to look at the UK, which is probably very common to most of the people who have dialed on the line. We're going to have a look at Belgium, Sweden and Portugal, all of which have very unique ways to pay, methods of payment. So we can go to the next slide, please. As we've done before, we're going to have a quick look at the different ways to pay, so the different alternative methods throughout. As I mentioned on previous webinars, we've got 300 significant APMs that are estimated to be used around the world. But we're going to have a quick look in a little bit more detail on bank transfers, e-wallets, payouts, cash-based methods, local cards, which you'll find a little bit different to the usual card network, and possibly direct debits as well. So if we jump to the next slide. So bank transfers have come up before, and as I mentioned before, you can look through the different types of payment methods within the banking network. The consumer enters their banking information, and the money is literally debited directly from the consumer's bank account, and then it's credited directly to the merchant's bank account. So as I've showed on the previous slides, very, very common a method that is being used throughout Western Europe. In most cases, bank transfers can take several business days, but in the case of real-time bank transfers, the merchant receives the funds almost immediately. So as you can see on the flow, you go onto your favorite shopping or favorite website, you place your orders, you put them in the basket, you go through, select which bank method you want to use, you enter your credentials, like I said, the debit is done via the bank, and it pings a confirmation payment to the merchant, and then obviously your order is subsequently delivered. There's some well-known names there, so the likes of Sofor, Finnish Online Banking or Verkkopankki, Zimpla, SEPA Direct Debit. You will come across these on a very regular basis throughout Western Europe. We jump to the next slide, please. So integrated bank transfer methods are slightly different to the previous method, in the sense that the flow is the same, everything, that the process is the same, but with these methods, so GiroPay, Ideal and EPS, as we've illustrated there, they are actually directly integrated to the merchant. So in the cases of Sofor or Verkkopankki, they provide an overlay, and when you go into that overlay, you can select which bank that you bank with to then obviously make the payment. Whereas GiroPay and Ideal and EPS are directly integrated. So the process is real time again, but in the split second of that transaction, the merchant can actually not only check that there's a significant amount of funds in the consumer's bank account, but they can physically process a transaction and return the funds to the merchant at the same time as well. So it is slightly different, the process is the same, but it's just the difference is the integrated or direct integration rather than the overlay from the previous one.
Richard, can I just interrupt you and ask you a question in relation to that? Because it's interesting that you pointed out the integrated version, and on the previous slide that it's not integrated. Is that the main difference?
No. So I guess integration is quite a broad word, because obviously it's integrated into the merchant's website or via PSP. But like I said, with the likes of Sofort or Verkpanki, Sofort goes and partners with a number of localized banks. So you go to Sofort as the method, and then you have an overlay, which is a drop-down menu, if you like, and you might bank with ABC bank or something. So you choose that bank, and then the transaction is taking place. Whereas with GiroPay, it is just GiroPay. So there is no member banks. You pay through GiroPay as a bank. So you don't have that drop-down menu. You don't have to select GiroPay is the bank that you pay with.
And that is obviously Germany.
Correct. Yeah, GiroPay is German. Ideal is Netherlands. EPS is German as well.
Okay. Thanks.
Cool. So we go to the next slide, please. So e-wallets, as again we've discussed in previous webinars, sometimes called digital wallets. It's a secure place that contains a number of different purses. The shopper can fund their e-wallet in any way that they want to, via credit card, bank transfer or cash. But once funded, shoppers can use e-wallet to then purchase goods online. So the flow is like I say, quite similar to the banking flow. So you place your goods in the basket, you choose which wallet you want to pay for, you log into that, you select the payment method through there, the payment confirmation is done, and then the orders are shipped. But what you'll see, interestingly enough, within Western Europe is e-wallets are definitely on the rise. So you've got the likes of Skrill or PayPal, which are very, very well known within Western Europe, and they seem to sort of dominated the landscape for quite a while. But recently, within the last couple of years, maybe there have been much more innovative new wallet providers that are popping up. So Yo-Yo, which you probably haven't seen that often, is very much a UK-based, started as a loyalty wallet, but then they built a payment function into it, and then they're starting to now push that out to the likes of Germany, Austria, etc. So I think there's certainly scope for, certainly the PayPal environment for new wallet providers to come in.
And Richard, do you think it's safe to say that those three examples you've got on the screen there are not, not an exhaustive list? I just want to let the audience know.
Absolutely. I mean, we could probably sit here and rattle off a dozen different new wallet wallet methods into the market in the last year. PayPal obviously is a brand that everybody knows. Skrill's been around for a while as a good wallet, but you might not see these wallets, or you might see it in a shop or something and not really know what it is, and chances are it's a new wallet. So there's certainly a lot more out there.
Okay.
So we jump to the next slide, please. So local card payments, as I mentioned, I think when I went through the different methods, is something which is quite well used within Western Europe. And I think the easiest way to describe this is actually to use the example of Bank Contact. Bank Contact is actually a Belgian debit card that actually has no chargeback risk, but it is very specific to Belgium. So it's not backed by Visa or MasterCard like one of the main schemes, but it is an independent. So, but it's very, very highly used, and when we cover Belgium within the countries list later, you'll certainly see how much Bank Contact is actually used as a payment method. The flow is again quite similar. Once a person buys the goods online, they actually choose Bank Contact as a method, and they go through the normal confirmation page. They put their account details in and so on, and their account is debited and the orders are delivered. But that's quite an interesting payment method, Bank Contact. So we'll talk about that in a bit.
Sometimes people. Sorry to interrupt, but just saying. Some people say local card payment, but also it's also can be referred to as a domestic card payment.
Yeah, but domestic is, I mean, Visa and MasterCard can be used as domestic because you would get issued a Visa card in your local country. But yeah, I mean, domestic, you could say domestic, local, but what you'll find is it's just for that particular country, or I mean, certain circumstances, certainly in other regions, there could be a payment method which is just used in a certain city, and that's it.
Okay, and so bank contacts is the Belgium example.
Correct. Yeah.
But that couldn't be used outside Belgium.
Sorry, say that again.
I'm assuming that this bank contact could not be used outside Belgium.
No, exactly.
Okay.
So yeah, so we go to the next slide, please. So cash payments we discussed in other webinars when we covered things like LATAM and Africa and so on, very, very common. But what people don't actually realise is they are quite common within Western Europe as well. With a cash-based online payment system, the consumer makes a purchase online, but instead of paying online, the merchant then produces a payment code, and the consumer can then pay in cash at a participating location. So they take the piece of paper with the code on it, they literally hand over their cash at a participating ATM or convenience store. The merchant then confirms the receipt of the payment, and then the goods are shipped. In certain circumstances, convenience stores could issue a voucher, and then the voucher, so then the consumer takes the voucher back online, plugs in the reference number that the that the retailer gave them, and then redeems that to obviously finish off the purchase of the good. You'll probably come across methods like Multibanco, Teleingresso. These are extremely popular cash-based payment methods within Portugal for Multibanco and Teleingresso for Spain. So like I said, you normally think that Western Europe is bank transfers and credit cards and so on, and the vast majority of it is, but cash payments is still plays quite a prominent role here.
Richard, did PaySafe would you classify PaySafe as a cash payment?
So PaySafe card, yes. I mean, PaySafe card is a cash-based voucher scheme. So you take your cash, you hand over your 20 euros to a retailer or something. They issue you with a 16-digit temporary PIN number, which is the same sort of configuration as on the front of a credit card or a debit card. And then that's the example where you take that back to your house, and then you plug that in online as you would do a credit card or debit card. But essentially, the voucher came from exchanging cash.
Right, excellent.
Cool. So go to the next slide, please. So we're going to start looking at countries now, and we're going to start with the UK. Brilliant, because that's where I am. UK is a very, very card-centric country at 52%. It's massively different from other Western European countries, and that's probably mainly because of the pound. So obviously we have our own currency here, whereas the rest of Western Europe traditionally works on the euro. However, it's very advanced actually when it comes to APMs on the high street, but not that much usage in alternative payments online, because it generally tends to be very card focused, as I said. However, this is predicted to rise to approximately 50% of transactions done at the checkout by 2019. And as you can see, we do 203 billion USD in e-commerce and B2C online. So that's certainly a huge proportion of revenue can be got through APMs. We're quite a sophisticated country, I guess. Almost 100% of the population is banked. Almost 100% or 92% has internet penetration. So we're very e-commerce focused. And obviously our population is growing. We're at 65 million at the moment, but you know, it's ever increasing. So we can go to the next slide. Oh,
would it be safe to say that the smartphone penetration is kind of indicative of consumers, you know, actually browsing and transacting on their smartphones?
It's just massively increased convenience. Absolutely. I mean, I'd say, you know, the amount of transactions that are done out there have significantly increased with the usage of smartphones, because you know, if you're browsing on a smartphone, you probably stumble across something which you might have denied about buying, but because you can buy it on a smartphone and because you can use a wallet, which is a secure payment method or something like that, you probably tend to buy it. Whereas, yeah, you wouldn't necessarily think to yourself during the day, I'm going to buy a pair of shoes, and then you go home, you have to physically log on online, and you might just forget to do that. So therefore, that transaction is not done. So yeah, I mean, definitely agree with that. So yeah, so next slide, please. So as I said before, Germany is ranked 4th in terms of the richest economy within Western Europe. It's certainly the largest in terms of population that we're looking at within this study at 81 million people. But despite having a very high banked population, almost 100%, again, just like the UK, card penetration is quite low. So as you can see, it's only at 12%. So even though people do have the access to use credit cards, culturally, they tend to use more bank transfers to purchase things online. And funnily enough, the credit card penetration is even predicted to decrease even more by 2019. So even at as low as 12%, I think it's going to drop to predicted around 9%. So people really do stay away from using credit cards. Germany is the biggest spender online as well, at 3.3 million GDP. And again, the economy is growing quite significantly in Germany as well.
And interestingly, Richard, even though Germany's obviously got a big GDP, but in terms of e-commerce, it's still just about half of the UK in terms of size.
Yeah, but it's growing more rapidly.
Right.
So you're right. I think the UK is embraced e-commerce sooner. But I mean, if you match the larger population, the increase in GDP spend, I think it's going to probably overtake the UK.
Right.
I think.
Yeah. In terms of growth, it's 16%. I mean, UK 15%, I think.
Yeah, it's growing. I mean, it's growing, but I mean, you can grow at the same rate, but there's more people. So
yeah,
it's going to be ultimately more spend. Yeah.
Interesting. Belgium?
Yeah, so Belgium's next. So as I mentioned before, with the illustration of bank contact, Belgium is a small country, only 11 million people in population, but it has a very big card, which is this bank contact card. And as you can see on the stats, 55% of people use a card at the point of transaction. And the banking population is up to almost 100%, same as the other jurisdictions. But funnily enough, I had a quick look, and out of that 55% of card-based transactions, a whopping 86% is done via the bank contact card. So that only leaves, 14% to split between Visa, MasterCard, Emecz, Diners, etc. So as we illustrated with the example of bank contact, it is certainly culturally the most well-used card that's out there. Next to bank contact, other options which are hardly used at all. As you can see, bank transfers are low at 17%, again, even though the banking population is almost 100. E-wallets are still down at 13%, and hardly anybody uses cash, interestingly enough, at almost 7%. So I think Belgium, like I say, is a small country, but it's got a fantastic card in bank contact. We go to the next slide, please. So Sweden is probably one of the only politically supported cashless countries, interestingly enough. Sweden have really embraced alternative payments, with cash transactions only being down again really low at 7%. Card transactions, however, are still dominant at 45% compared to others. But you've got Klarna, which is becoming more mainstream now than ever before. And I think the general perception over cards, even though it is still utilised quite heavily, is it might be becoming a bit of an old-fashioned way to pay. And certainly statistics show that it's going to decline by 2019 even further. So you'll have, again, things like Klarna's or other bank transfer methods increasing. Sweden, again, is quite similar to the UK in the sense that they've got 100% banked population. Internet penetration is very, very high. Smartphone penetration is pretty high as well. So again, small country, but I think we'll see some big things coming out of Sweden.
And Richard, I know we're getting quite a few questions from the audience, which is great. I'm really pleased that people are sending in questions. I am tempted to ask one of them just here, just because it's relevant. When you talked about card-based transactions, you know, I think you said for the UK, you said 52% it was cards. When you say cards, you mean debit and credit together, or are you distinguishing between one or the other?
Traditionally, we mean debit and credit cards, yeah, together, matched together. I mean, you can take it one step further and split that in terms of debit card usage, credit card usage. You can split it even further in terms of Visa, MasterCard, Emecz, you know, as I mentioned before. But we've sort of banded it together in terms of general card usage.
Okay, good. We've got more questions coming in, so we'll try and keep those until the end. But you,
yep.
Good to go on.
Yeah. So next slide, please. So Portugal is the last country we said we're going to look at today. Portugal has certainly seen some difficult economic conditions recently, but retail is actually set to show some significant signs of growth. Interesting enough, e-commerce is taking off in a big way in Portugal, and you can see that in smartphone penetration at 65%. However, again, cards collectively, as we established, is up at 65% as well. But the general usage levels of the cards is expected to decline in 2019. As I mentioned, e-commerce is certainly on the rise. So if you look at smartphone penetration in Portugal at 65% in comparison to the rest of Western Europe at 70%, you know, they certainly they are up there. Multi-banco, as I mentioned before, is a very highly interesting sought after alternative method, and actually because it has two ways of being used. So there's two options. Option A is to buy online and then use a multi-banco bank transfer to make the payment, which could amount to the increase in internet penetration, as we've seen, at 68%. Or the other option is that you allows a person to go to a bank branch and pay with cash. So it's quite a versatile alternative method. So you know, if people want to still use cash, I mean, cash is only being used at 9% in Portugal, so I think less and less people are probably using that. Multi-banco still allows you to do that, and also allows you to use it online as well. So it's quite a good method, and we'll probably see more of that coming through.
And Richard, it's interesting that you're pointing out bank transfers, and I just wanted to clarify for the benefit of the audience. When you talk about bank transfers, you mean counting invoices and bank transfers together?
I don't think we include the invoicing together with bank transfers. I think when we say bank transfers, we just generally mean the transfer from one account to another.
Okay.
But I can clarify that actually, so I'm not 100% sure on that one.
Okay. All right. Thanks.
That's right. And then final slide from me, I think. So as many of you know, just to wrap up, PPRO is a partner for worldwide PSPs. We have over 140 different payment methods that we can integrate. We partner with acquirers, processors, PSPs. We offer the full value chain across processing, collections, settlements, FX. And how we do that is through a single platform, single integration, and a single contract with our partners. So that's me done. So I'll hand over to Steve, who will take over from here.
Good afternoon, everybody. Steve Emecz here from collectAI here in snowy Hamburg. If you could go to the first slide, please, and the next one. Okay, the rollout of PSD2 brings in some new opportunities for digital payments, and one of the areas I'm going to talk about today is receivables. The volume of overdue payments in Western Europe has grown steadily in the last decade to trillions of euros. But few organisations are investing enough in innovating their processes. The advancements in technology and changes in consumer behaviour have created a need for frictionless payments, and I'm going to walk you through how that presents a significant opportunity for PSPs and payment organisations here in Europe. But first we're going to start with a little bit about PSD2, so if we go to the next slide. So it's generally taken that the idea behind PSD2 to create a technically solid and legally solid access to account information is a really good thing. It's a great idea. At the moment, there are a lot of workarounds that have evolved over time, but now we have the regulation gives the confidence for people in the long term that use cases will come out to use that. So we've just created a little chronology here to show back in the 1990s there was poor conversion online, and then we had credit cards and invoices coming in, PayPal coming in the mid-noughties, so forth, and now we're coming into the world of instant payments. But the feeling really is that something was needed to enable a much better usability for customers, because the current front-end solutions for instant payments generally are relatively poor. Next slide. So when we talk about instant payments, we want to just define what we see as what an instant payment is. It consists really of three things. One is that it's a real-time transaction between a payer and a payee. In terms of the speed of the authorization, clearing and settlement is instant, so under 10 seconds is the definition there, and that is available 24/7, 365, so it's available all of the time. Next slide, please. So going back into some of the things Richard talked about earlier, there's in our world a couple of different types of instant payment. There's a quasi instant payment, which is PayPal and so forth. So this is a speeding up kind of wallet-based and bank-based scenarios, and then what we would call real instant payments, which are happening in the blink of an eye. And Richard mentioned Sweden, which is on this slide here, Swish. Vips from Norway, and the quite incredible mobile pay from Denmark, which has over 3 million users in an adult population of a little over 4 million in Denmark. So certainly 3 out of the 4 major real instant payment solutions being based out of the Nordic countries there. Next slide.
Steve, can I just ask you a question before you advance on that slide? I just want to distinguish between quasi and real instant payments. The two examples you've got there is PayPal and so forth. When you say quasi, it's where PayPal has the consumers linked their debit card to the PayPal wallet. Is that what you're talking about there?
Yeah, I mean, you could classify that sometimes a customer has a PayPal balance, but that's generally a bit more of an exception than the rule. If they've made a sale on eBay, for example, they've got a bit of spare money sitting on their PayPal account, then you could argue that is a real instant payment. But the majority of PayPal is backed by the funding mechanism that sits behind it. And by the way, it could be a card or it could be a bank. So the interesting thing with PayPal and with a number of other wallets is you can have multiple funding tools sitting behind that to create that payment. But it's kind of a double hop. Yeah, it's taking it from the account and then it's going back and it's looking at that funding vehicle, making sure that the money's there and goes forward. Whereas the ones on the right-hand side are we would see as real true instant payments.
And they are leveraging the instant payment or immediate payment infrastructure of the banking networks behind them, within those particular countries. So Denmark, yeah, as you mentioned, UK.
Yeah, interestingly, Swish and PayM do that. My understanding is that mobile pay and Vips actually run on card rails, but or at least started on card rails with a view to move across to bank rails. So setting up a mobile payment solution is really quick to set up with card rails, but obviously there's significant costs associated with running through the card rails. So the most efficient from a costing perspective is to run through on the bank rails there.
And of the 4 examples you've given, may I sort of suggest that PayM is a little bit different in that it's more person-to-person real-time payments?
Yes, I think again, mobile pay started like that. Swish and Vips, they all started with P2P because that's a great way of getting volume and it's a great way of getting users onto the system. And then all of them have tried to evolve to become payment methods. So mobile pay started with P2P, and then we launched mobile pay online, and now mobile pay POS, so you can pay with your mobile pay account in store.
Right. Okay. All right. Thank you, Steve.
So next slide. So if we look at the use cases going forward in terms of payments and instant payments, it's interesting to see the difference in time that it's taken in a big market like the UK and then in some of the smaller markets. So if you look at the UK, it's taken 6 years to reach 100 million transactions a month. Yet if you look at the Swedish market, Swish put on 5 million users within just 3 years. But I think the exciting thing that's coming with PSD2 is it means that there's significant potential for front-end, very user-friendly tools for customers. We're going to go on to talk about some of those in the moment. So if we go to the next slide. So one of the interesting things that people often talk about with PSD2 is this idea that it's decoupling the bank from banking or removing the bank out of the equation. If we look back to the 1970s, banking was done face-to-face. So you had your personal advisor and you would go into the bank. The banks were actually the first ones to introduce walking away from that personal relationship when they introduced the ATM network. So for the first time you were able to take money out without having to go into the bank. And then again, the banks pioneered and introduced early stage online banking in the 80s and then into full online banking. But what's interesting is if you go through the 90s, the noughties and into almost the modern day now, not that much has changed. It's been an optimization of online banking. But with PSD2, as we're going to talk about a bit more, is it brings in a potential decoupling of the function of banking from the banks. So if we go on to the next slide, we'll talk quite a lot about the opportunities, but it's really important to highlight the obligations that are brought in at the same time as well. So one of the challenges facing the fintechs and also new entrants into the market is that the PSD2 brings in some significant obligations in terms of licensing, in terms of the technical work that needs to be done. So these young companies that are entering in, people often paint the picture that it's a completely rosy picture of access to accounts and the ability to enter into the market, but there's a lot of work for these young companies to do. Next slide, please. So here's an interesting thing. So if you look on the left-hand side, in terms of who does somebody trust, and this is from the German data, for example, 81% of people trust the bank to be handling their money and dealing with their payments. But if you look at who owns the customer relationship and who owns the voice, the screen time of the customer and the access to the customer, then you can look to what's often called the GAFAs, or Google, Amazon, Apple and Facebook. So these guys on the right-hand side have a fantastic access to the customer relationship, whereas the banks hold the trust. What would be interesting to see is whether these strong consumer brands will be able to actually break into core banking. I was at a banking conference about 2 months ago, and one of the presenters asked the audience, obviously it was banking people, but if Google or Facebook offered a bank account, would you be prepared to open one? And it's interesting to see that these guys don't seem to be stepping into banking, but they are stepping into payments. And I don't know if anybody saw the news recently, the last couple of days, about Apple likely to buy Spotify. This is a huge step, which would give access to Apple Pay to several hundred million users. Next slide, please. One of the key hopes of PSD2 is that it's going to provide some stabilization through this tight regulation and tight licensing to a number of different solutions. I'm not going to walk through all of these different ones. You'll see that under payments there's instant payments and digital currencies, but there's a number of different solutions here. So the key benefit here is you're not reliant on technologies like screenscaping. You're actually working on real account data. Next slide, please. And one of the areas here brings in terms of single sign-on through to accessing these online payments. So if you look at your traditional single sign-ons, you've got sign-on with Google, Facebook and Twitter, and more recently sign-on with Zing, for example, and with LinkedIn. But if you look at the new entrants into the market, they fall into two kind of interesting groups from my perspective. The first one is new entrants that are coming in that have a brand new brand. So if you look at Yes, which is a single sign-on that gives access for banking payments, it's in beta at the moment with a number of players out there, but they have to establish that brand there. It's a very interesting example and a fascinating technology, but they're going to need to build up that consumer brand. What the other kind of entrant that we think is going to come into the market is established brands that are already trusted, and you can see there, you know, three brands that are testing stuff here at the moment with Deutsche Bank and Daimler and Allianz. These are very well trusted brands from a consumer perspective, and it'd be really interesting to see whether the consumer also trusts them in handling their payments. Next slide, please. Okay, so PSD2 enables a multi-banking approach, but not only for banks. So this is the ability for non-banks, like the GAFAs, like the Deutsche Banks, etc., to be able to step into this area, and these solutions potentially could be highly competitive very quickly. And this is sometimes referred to as ecosystem-led banking. Next slide, please. So this is one I recommend everybody checking out. For me, very interesting. It's Yolt, which is a new product from ING, and this is a solution that uses the new rails to be one of the first examples of a UK bank providing a platform for customers to manage all of their finances across all of their different accounts. So you can log into your Yolt account, you can set your Yolt account up, and then you can link it to all of your internet banking solutions. So on one single app, you don't have to have multiple apps anymore. And this is really fascinating for me, because this means that one brand or one touch point owns the customer relationship across all of their different elements. And this will start to spread in from, this is account management here at the moment, but this could easily spread into the instant payment element as well. Right, now we're going to move on to the area of receivables, and really this is a huge new opportunity for all payment companies in Western Europe. We started with this slide because it gives an idea of the size of the overall global market. Currently there's $152 trillion of debt worldwide, and in the European market it's trillions and trillions of euros. So if we get to the next slide, this gives an idea of the practical available market for payments companies. Around about 1 in 4 invoices in Europe is paid late, and at the moment the vast majority, almost 100% of that, is settled by a transfer. So instant payments, online payments, has almost zero share of this huge market at the moment. And if you look at the figure for B2B, it's even higher, and this has been growing steadily in the last few years, and the B2B payment number is over 40% now. Next slide, please. The other area that makes this an interesting entry point for payment companies is that most organizations are well behind with their handling of this area compared to their sales area, the e-commerce side. So whereas 49% of companies consider themselves digitized, next slide, less than 1 in 5 of them have actually digitized their receivables or their dunning process. Next slide. Yet half of those understand that if you did digitize that process, then that would lead to less payment and less default. So the opportunity here for the payments companies is, if somebody's missed their invoice payment, their loan payment, or any other kind of payment on credit, to be able to settle that payment quickly with an instant payment. If we go to the next slide, we can see that there's still some significant upside as well if you start to introduce machine learning. So everybody's talking about machine learning and artificial intelligence from the front end in terms of chatbots and things like that to talk to the customers, but less than 2% of companies have applied machine learning in their back end processes in Germany, and this is very common across the whole of Western Europe, very low levels of machine learning. Next slide. Now, Rich talked a little bit about this in terms of mobile and the importance of mobile. I love this statistic, and I wanted to include it in today. Consumers touch their smartphones more than 2,600 times a day on average. This is staggering, and if you look at the millennial segment, they spend over 3 hours a day with their face into their smartphone screen. This is a piece of research from The Economist from a few weeks ago. So when it comes to payments and instant payments, whether it's in e-commerce or whether it's in receivables, as we're going to talk a little bit more about, it's vital to be mobile optimized. Next slide. So what's wrong with the current receivables processes? Well, firstly, they tend to be relatively ineffective. So there's quite a lot of resources, mostly people on the end of the phones chasing overdue payments. But they generally don't invest a lot in technology. They're inefficient, so the cost of collecting an individual item is very high, so it could be several euros or several pounds per item to collect it, and that's a great opportunity for payments companies because payments in e-commerce is quite competitive, but if you look at this space here, charging somebody for a digital way of collecting these payments is way more efficient than doing it with humans. The third element is that it generally tends to be very unfriendly in terms of the current process, tends to be very human-based and people chasing on the phones. And
Steve, can I ask you a question on this slide? You've highlighted the 3 problem areas from your perspective. Is there a kind of a 4th element here where it involves cross-border transactions and currency differences between what's sold and what's clearing and settlement? I'm just curious on your point of view on that.
Yeah, remember a very high proportion of these sales are domestic. They're in country. Yeah, so people don't tend to give credit to people outside of their region. So if you imagine somebody selling to somebody on an invoice, it doesn't tend to be out of country. So there's not that much cross-border in this. There is a little bit. But if you look at the statistics, you know, a very high proportion of people are going to pay. So I think something like only 1.3% of invoices issued in Europe end up being defaulted. So it's a very small number. But increasing number of invoices are ending up being late and loan payments being late, etc. And the challenge is that the processes to chase the people that are overdue are way out of date. You know, sending letters in the post or sending mass emails out to people to chase them for their payments, it is just not keeping up with the current customer behaviour, which is very smartphone based and very digital. So if we go to the next slide, what we've done is we've really focused on contacting the customer in a digital way and driving them online to a microsite or a landing page that's white labeled for the merchant and enabling the customer to settle their outstanding bill in a way that's so similar to an e-commerce shopping basket. You can see that this is one of our landing pages. You can see that the customer sees their outstanding amount of money that they need to pay, and they're given multiple payment options to settle. And that's a mobile version on the right-hand side. You see there all of the process is mobile optimized. One of the big differences between an e-commerce payment and a receivables management payment is that in addition to the payment options, we also provide multiple engagement options as well. So we would enable disputes, callbacks, installments, and even live chat. So you can actually have a conversation with an agent if you've got a problem with paying or if you've got an issue with paying.
Steve, I'm conscious that we're just in terms of time, you've got a couple of slides. I'd like to get into the Q&A session. So
yeah, 2 slides left. Yeah. So very quickly, this is the end-to-end customer's receivables journey. We send out a communication, drive a customer to a landing page, and offer them payment or direct feedback. Next slide. And here's a very quick example of what PSD2 might do for us in this scenario. So imagine a customer who can't afford to pay, gets to the landing page. We may be able to offer them a customized instant offering on an installment payments because we've got access to their account details. And that's me. Next slide. I think that's the end. There's a summary. PSD2 is opening up the new opportunities across payment value chain. Instant payments are critical for improving multiple processes. And receivables is an example of a process that's ripe for improvement. We partner already with 4 major PSPs, and we're talking to a bunch more to enable them to come and step into this large market. I think we're processing something in the region of 25 million euro of receivables at the moment, but we're looking to expand a lot more. And I think that's the end.
Thank you very much, Steve. Really appreciate the presentation, and Richard. So I'm going to take some of the questions that have come in. So first of all, one's for Steve. So that's good. You were the one who was speaking last, so maybe you could take this question. In terms of the role that the payments provider provides in terms of a brand role, the role that the payments provider, the brand name is important, that people recognize PayPal and Visa, obviously, because they've had years and years of building those brands. But what do you think that plays in terms of a decision-making process for consumers?
Consumers here being the merchant, in terms of the PSP?
Well, that's a good point. I mean, actually, consumers and merchants.
I think from a consumer's point of view, it's absolutely critical. I mean, we've seen it already here. We've just deployed PayPal for our first customer here in Germany versus an unknown kind of bank transfer product. And we've seen in 3 hours more payments than we saw in 10 days with the unknown brand in terms of end consumer. So the end consumer reaches the landing page, sees a number of payment options. We introduce PayPal, and we've seen an absolute flurry of payments because they trust that brand. I think from a merchant's perspective, I think there's probably a trust element around the PSP, but I think there's also it's very competitive. So I think there's definitely going to be much more price element within that in terms of brand. I don't know if Richard, you want to comment on that?
No, sorry. I think I was just thinking if I could add anything to that, but no, I think you summed it up really.
Okay, well, thanks for that. Steve, I wanted to ask Ralph a question that's come in, and it's very relevant around PSD2, and it's one of my favourite topics, and how applicable it is to a US financial institution that may be serving European-based consumers. I'd be interested in your views on that, Ralph.
I think the implication will be limited, actually not so much, because it's true that PSD2 now covers one leg out transactions in any currency, so it's different from PSD1 where that was not the case. And well, yes, the legislation aims to provide some transparency over end-to-end charges and delivery terms, but we shall not forget that first and foremost, PSD2 applies to payment service providers in the EU only. The European Commission actually did a fact sheet some time ago where it says that the extension of the scope has implications primarily for the banks located in the EU. So in practice, it means that financial service providers shall provide information and transparency on the cost and conditions of these international payments, at least in respect of their part of the transaction. But there is no extra territorial effect intended. So there is no intention here to start regulating US financial institutions out of Europe.
Okay, thank you, Ralph. One for Richard that's come in. The question is why acquirers and PSPs in Western Europe are more aggressive in terms of high-risk type of merchants. What helps them to take more higher risk or bigger risk on merchants? Curious on your views on that, Richard?
I think, I mean, if you take the example of gambling, for example, then Western Europe is obviously quite dominant in the gambling space. So if you're saying why are they more aggressive? Then the charges of like fraud or chargeback are much higher in the gambling sector. So PSPs and acquirers have to be more aggressive when it comes to screening or KYC or something like that. So I think that's probably why they're a little bit more aggressive. I mean, if you're talking about why they're more aggressive in terms of pricing, again, I think it's because of the risk element. Chargebacks in gambling or fraud in general is much higher due to the huge amount of volumes that go through. So it depends on which sort of context why they think it's more aggressive. But I mean, that's a couple of answers I think on that one.
Okay, thanks, Richard. And do you think, I mean, maybe just for me to add to that, do you think they're a lot more experienced in Western Europe in terms of dealing with risk and detecting fraudulent activity? Yeah. Maybe that's part of the reason.
Yeah, absolutely. I mean, yes, I definitely agree with that. But I mean, if you look at the States, for example, they're also very well experienced within that sector, and they tend to be quite aggressive when it comes to things like the KYC, the due diligence, the pricing and stuff. So maybe that's the common trait between the two regions.
Okay. Could I add to that maybe, because I think there's one other element there as well, because we have overall, and Richard, you mentioned earlier, more of these alternative payment methods here in Europe. So it's less card-based, and therefore many of those APMs are not liable to chargebacks. So the merchants are actually getting the payment. They're sure to, once they receive it, they're sure to keep it. So these are push payments, really, the majority of them, and that helps, of course, a lot to reduce the risk from a merchant's or a PSP's perspective.
Okay, well, we've still got more questions coming in, so I really appreciate that. One from Ralph, who's just been talking. So why there is no platform like Chinese Alipay or WeChat developed in Europe? I'm just curious what your views on that.
Well, I think that e-commerce in China started from very little infrastructure and penetration in terms of banking and credit cards. So therefore, in China, most people needed something new, and Alipay and WeChat or Tencent, who did it, they just leveraged that gap. And whereas here in Europe, things are very different. So most people already had means for electronic payments even before e-commerce took off. And so, well, we actually see very slow take-up of mobile wallets or mobile payments in general, because people have their habits, they have their existing whatever means of making payments, and that's what they stick to often.
I think another element there, just to chip in, is the fact that in China and a lot of developing countries, the first access to the internet is via the smartphone. So you don't have this choice of buying through your desktop, laptop, and your computer versus a phone. So something like WeChat and Alipay has got, you know, a very high proportion of their users do not have a computer.
I think my perception is that the message type of applications like WeChat and WhatsApp, and also there's Line, are more likely to incorporate the ability to make a payment, and we in Western Europe are more expected to be exposed to those types of platforms. So I think I would suggest stay tuned, because I think it's likely to happen over here as well. I've got a question.
Sorry, I was going to add one thing on that one as well. But obviously, WeChat and Alipay are sort of bridging the gap between online and offline as well by the introduction of QR codes, because you can scan these in store through, like Steve said, through a mobile app where you've never touched a computer, and it's all done via an app. But if you look at Bank Contact, which is what I mentioned earlier, as an example, they've actually started to introduce QR codes now as well. So I think, to answer the question of why we're not seeing it over here, we are, but it's just happening very slowly. And Bank Contact is a good example. There's a closer direct comparison, I think, to WeChat and Alipay as anything.
And there's a question here, I'm just trying to understand it. How disintermediated will the relationships become as a result of PSD2? This is obviously a question for Ralph. And are we, do we I'm not too sure how this has been. Are we open to ourselves, up to a society where banks are simply robots processing payments and holding funds with no real personality? That's quite an interesting question. Ralph?
Well, I worked in telecoms 20 years ago when the telecoms industry was deregulated, and so the telecoms today is very different here in Europe than it was then. And I think that very similar things will happen to banking. So I'm not seeing it completely back or only to infrastructure. Banks will manage similar to how the incumbent telecoms operators have done. They manage to build their own value-added services on top of the basics of holding funds. They already have, and they will do more given the competition that's coming in. So I think that is the best analogy to think of. So I believe think about telecoms and apply that to banking. That's what what we're going to see happen.
Okay, so we're running out of time, so I want to just ask the last question to Richard. So what's the difference between Yolt in the UK and banking and Linuxo in France? Are you familiar with those?
I've heard of Linkso, but banking, I think, is more. It's the same as a real-time banking method. But Yolt, so Linkso is like a tool that you can use to manage your personal finances. So what you have built into that is obviously bank accounts, credit cards, etc., etc. And I think it's a way for a consumer to help analyze and optimize their financial spend across the different ways that they have. And I think Yolt is the same thing over here in the UK. So you can actually, again, manage through like an app. You can plug in all your bank accounts and different credit cards or whatever you may have, and it helps you to manage your funds through like a single source. So I think Yolt and Linkso are the same, but obviously for different countries. Banking, I think, is just another real-time method.
Well, I'm aware of banking. I think they're doing similar things. I mean, if you mean the one that's spelled without the G at the end, so that is also an account information services particularly in France. So same category, account information services.
Yeah. I think it's safe to say that PSD2 is kind of adding fuel to the fire, where a lot of these services are going to come up in the future. So without overrunning too much here, I'd like to thank Richard, Steve, and Ralph for their very active and very formative insights into the Western European e-commerce market. I'd like to remind the audience that the e-commerce reports and payment reports for Western Europe, Asia, LATAM are available now on the PPRO website under the appropriate area within the reports. And I'd like to bring the webinar to a close. Thank you very much.
Cool. Thank you, everyone.
Thanks, guys.
Thank you. Bye-bye.
Thank you.